Welcome to the new European ETF market trends for October 2015. Marlene, hi. Was October a good month in terms of flows for the European ETF market?
European ETF market flows show signs of revival in October 2015. Net new assets during this month amounted to 5.9 billion euro, in line with the one-year average. Total assets under management are up 24% versus the end of 2014, reaching 448 billion euro, which include a significant rise in market valuation, plus 10%. Global emerging equity and US equity inflows benefited from a risk-on environment. European fixed income ETF flows have seen a revival amidst hope of an increase in QE following comments from the ECB President Mario Draghi.
Okay, and did investors have a strong appetite for equity indexations, and what indexations did they favor?
Equity indexation saw a slight increase in inflows at 2.2 billion, still below the one-year average of 3.3 billion. Interestingly, with the decreasing probability of a Fed interest rate increase before year-end, investors have started to re-enter emerging markets, mainly through global emerging market indexations, with 869 million of inflows, which is a one-year record high. Emerging Asia equity ETF flows are still negative at euro 112 million, but up from 752 million of outflows in August 2015. Conversely, inflows on developed equity has been very limited at 1 billion, as valuations look less attractive against current economic and earnings momentum. On both US and Japanese equity, flows were close to zero. European equity ETF inflow were at the lowest level since June 2015, at 669 million.
Okay, interesting, thank you. Did fixed income follow the same trend as in September? And what category of this asset class did it concern?
Opposite to what happened in September, fixed income indexation inflows experienced a strong revival at 3.5 billion. Interestingly, these fixed income flows are maintained across all categories. European ETF govies inflows at 1.2 billion are close to a one-year record high. Developed market corporate bonds also benefited from a more positive environment, with 807 million and 657 million respectively for investment grade and high yield corporate bond. Nearly 3/4 of the investment grade corporate bond flows, namely 663 million, concern US ETF, as higher yields and decreasing fears of interest rate increase favors the US market. Emerging debt indexation were also in favor, with 388 million of inflows after 5 months of outflows.
Okay, and finally, for commodities, what were the flows?
Commodities flow were slightly positive at 90 million euro, with positive flows on broad commodity ETF, while there were outflows of 71 million on precious metal ETF.
Thank you, Marlene. We will be pleased to meet you for the next European ETF market trends in December. Thank you.